To get us in the mood for a conversation about the economics of supermarkets, joined in the studio by Abi Akl, who's a partner and head of Oliver Wyman's retail and consumer practice in this region. Joe, good morning. Thanks for being with us. So new research from you guys about the supermarket wars, my phrase, not yours, here in the Middle East. Where do we stand?
So basically, we've launched this report recently, and it's based on a tool developed by Oliver Wyman called the Customer Perception Map. We've typically launched it globally, and this time we've done it in the region, in the UAE and Saudi. And obviously, it builds on the fact that these two markets are quite interesting when it comes to growth area. They've been growing consistently in line with evolving consumer demand, but also they face quite a bit of challenges, be it competition, saturation, but that didn't really stop the market from having a lot of interest in this space, given what we've seen in the recent IPOs, acquisitions, and expansions.
Well, exactly. There's lots going on, isn't there? Lulu going live just a few days ago, trading on the Abu Dhabi market, and they have big plans for expansion, particularly in Saudi Arabia. That's part of their pitch in the IPO, in the prospectus. But then you used the S word there, saturation. Is there room for Lulu to grow in Saudi Arabia?
No, it doesn't have to be the case. So saturation is obviously something that the grocery markets are impacted by. If you look at the UAE, you already have a very decent modern trade ratio. It's less in Saudi. So Saudi has still a higher probability or potential for organic growth and geographical expansion. But these players need to differentiate beyond just growing by opening more stores. I think they all understand that what they need to do is differentiate, innovate, and any market they enter, they need to enter with a clear proposition that would cater for these evolving consumer needs, be it on personalization, on need for value, on the need for local products, private label, that we've all quite clearly, let's say, detailed in our report.
Well, we've got the two listed companies now, Lulu and Spinneys, that's fine, both based in the UAE, but both growing in Saudi Arabia. The big player in the region is Carrefour through Majid Al Futtaim, where you worked for many, many years, so you know that business well. Apart from those big beasts, do we have room for niche players, or is scale key here?
Very interesting question, because if you really look at who's going to emerge as winners in this space, the way we've identified it is along three different models. You have obviously the incumbent that you've mentioned, and these incumbents are well positioned in terms of market share, economies of scale to capture the market, keep growing, adapt their store formats to local needs, play the pricing, promotional aspect, move from being supplier-led to customer-centric, and tap into this looming consolidation that is starting to ramp up in the market. But there are other two models that can actually win. One is the discount model, and we see a lot of appeal for value and for discount in this part of the world. In Saudi at 70%, in the UAE at 60%, where consumers said very clearly that they're willing to shop at a discount model.
So which means, how would you define a discount model? If we take those two of the brands that I mentioned, the listed ones, I think of Lulu as being more value-oriented. I think of Spinneys being more a premium supermarket. Would you include a Lulu as part of the discount?
I wouldn't. Both Lulu and Carrefour obviously compete on price, because value is one of the biggest drivers of satisfaction. When I say value, I mean price and promotions in this part of the world. But when I talk about discount, is a more focused, let's say, retailer, fewer SKUs, bigger volumes, lower pricing, with a very clear proposition around value and price. A player that comes to mind is Viva, for example, in the UAE, and they're starting to make strides in that space. So that would be typically the model. Carrefour has announced that they're willing to and ready to go into that space. They've launched something around discount in Egypt, and they're looking to expanding it into the GCC. But a third model that is quite interesting and a bit more niche is what Spinneys is doing. So quality-focused, niche, catering for high affluent segment. They're able to grow market share, to keep growing their customer base, grow their revenues, while maintaining record high profitability. And that's what a very specialized retailer can do while competing with other players. So there is always room, but you have to have a very clear differentiated proposition.
So when you talk about discount retailers, I'm thinking in North America of companies like Costco. I'm thinking of Sam's Club, the offshoot of Walmart. As you say, you buy in bulk, it's cheaper, and it's been very popular for, half a century now, hasn't it? But it's not something that's really part of the culture here, is it? Yet.
Yet, then I think that's the key word. Obviously, you've mentioned I worked at Majid Futtaim for 8 years. We've looked at this model. There was no room for it in previous years, but I think now everyone understands that this is the right time for it. Consumers are becoming more cost conscious while expecting a better quality. So this is the right time for it. I think out of our report, this would be probably the highest or let's say biggest finding, is that this is the right time for retailers, be it new entrants or existing retailers, to start seriously looking into this discount format, because the customers are asking for it, they're ready for it. The ones who know about Aldi and Lidl, for example, in Europe, at above 80% said they're willing to shop at these stores if they ever open in this market, which means this is a key priority for operators existing in the market or ones that are coming in.
Where do you see the breakdown of international brands operating here? Carrefour is obviously a French brand. Spinneys has the Waitrose franchise here versus homegrown brands, and of course Lulu would be a good example of that.
Yeah, I think regardless if you're a global operator or a global brand operating in the region or a homegrown concept, you'll have to be local in anywhere you operate, be it in Saudi or in the UAE. Going back to some of what I've mentioned. So first, 90% of consumers in this region are looking for locally produced products and services. And this goes obviously in line with what the governments are doing around food security, food safety, and enhancing the quality of local produce. So regardless if you're a big brand, a local brand, or a global brand, you have to focus on the local aspect. You have to focus on private label, which is something that has a lot of appeal for customers at above 60, 70, 80%, depending on the UAE or Saudi. So I wouldn't really think the differentiation will come from being a global or a local brand. The differentiation will come from how local can you be and how personal can you be with your customers, and if you can actually deliver an intimate type of relationship.
What about smaller stores? The way people shop is changing. The old weekly shop is still common among some families, but particularly in a city like Dubai where you get lots of young professionals, they don't do a weekly shop and stock up. How is that changing the way the supermarket works?
I think there is room for every format. The format around hypermarket, supermarket will always exist. It needs to adapt. It needs to be probably changed in terms of format, become more experience driven. And there is also a polarization between customers expecting experience, bulk buying, at a good price, and other as you said, expecting more around convenience and quick
Final
shopping.
question. We've only got about 20 seconds left.
Sure.
I want to throw this one at you.
Sure.
Online versus bricks and mortar. Is there still a role for the good old-fashioned supermarket, hypermarket going forward?
Absolutely. Obviously, digital will keep growing. It will take its fair share of the market, around 20, 30, 40%, whatever it gets to in the coming years. But brick and mortar is still core, and we see it actually doing a comeback. And the customers will still need to go and shop whenever they need to for specific journeys, and online will play its role in that space.
Joe, great talking to you. Appreciate your time this morning.
Thank you.
Joe Abi Akl is a partner and head of Oliver Wyman's retail and consumer practice for this region.
Dubai Eye 103.8.
Join the conversation.